Welcome to the Theo video for Thursday, February 4th, 2016. My name is Jeff White, and as we look around the screen at today's action, it really was a pretty mixed bag out there. Early this morning, we did see crude oil and this relationship with ES kind of continue. And you'll recall that yesterday we saw crude oil turning prior to the moves in stocks, and it was a little bit less of a discrepancy in terms of time yesterday. It happened kind of right in line, but we saw crude oil turn higher before the ES by about 1 bar on these 2-minute charts. Well, today it was a little bit different. That crude oil turned shortly after 7 a.m. and it was about 35-40 minutes later that we finally saw the SPOs turn higher as well. But they did follow, and then you'll notice here that crude kind of topped here for the session at about 8:30 or so, and stocks again kind of lagged by about some 45 to 60 minutes after that. So kind of a lagging relationship, but in both cases the lows of the day were set after crude were in the ES as well as the highs, and so that relationship just continues here between the two of these. On the day, we did see crude give up about 1.6%, which is a pretty minor concession on the heels of yesterday's enormous rally to the tune of 9.3%. So it may not be a smooth ride back up for crude, even if it has seen its lows, and that certainly remains to be seen. It's likely to be a bit of a process of bottoming out for crude oil, and waiting for some kind of support to be established for a little bit before some momentum can return to the upside. And gold, for example, has seen that very type of look over the course of the past few months. Now, it also endured a pretty significant decline here over the course of several months from just the highs last October. So we saw a big decline here into the low of 1045, but then we saw that it took a little while for some of these kind of incremental higher lows to form, and then this recovery high was eventually eclipsed here as gold was able to push beyond that and even pulled back and set another higher low here. So kind of some gradual improvement here to the upside before price could finally start to move to the upside with much greater momentum and velocity, which it's been doing here in recent days. And so that's been absolutely something to keep an eye on here, because it's really been improving here after some gradual stabilization here, and it could be that crude oil ends up having to take on this same type of look. Time will tell. We also today saw bonds continue to back off of their intraday high from Wednesday's session. That was at 164.07, and in the early going today, we saw bonds down here at a low of 161.21. But as the day progressed, we saw them kind of recover, and they ended up going out really at their highs. The high was 163.08. They closed at 163.07. And so, this so-called safe haven of the bonds is still in demand. And these dips that we've been seeing here in recent weeks have been very short-lived. They've been very shallow, and it makes it tough to jump on board this moving train here, as well as really difficult to step out in front of it and fade it unless you're incredibly nimble, because there's been such persistent strength here. The dollar today also saw a bit of a move and continued its slide here of the past few sessions, and we've seen it starting to really give up a lot of ground here in the last couple of days. And yesterday the intensity really picked up with this big bar to the downside in the dollar, and it erased several weeks worth of upside progress here over the course of just a single bar. Now, it may be that today's continuation here to the downside has left it a little bit short-term extended here. However, it's hard to deny that we've seen a significant change of character here that's getting underway, and that should not be ignored. But the real big story right now is in the SPX, and in terms of this short trading, the short-term trading range that we find ourselves in right now. That's really kind of the focus of our attention at the moment, because this lift off the 1812 low that took us all the way up here to 1947, that was absolutely significant, though we've yet to clear that 1950 level here and show some upside continuation. So last week's low down here at 1872 that we had seen on the 27th, that was tested right to the number during Wednesday's session, and we have of course, lifted from there, and we saw the S&P tack on just a very insignificant 2 points and change in today's session. But so far, it's very clear cut that we've got a very well-defined short-term trading range here, caught between this 1872 area and this 1950 area. And so, tonight, having closed right here at 1915, we're sitting here, and I kid you not, we're smack dab right in the middle of this range. We've basically got 35 points of upside before we could exit this range, or we've got 43 points of downside before we would test these short-term range boundaries. Okay, and so that's to say that we are kind of caught right here in the middle of the range with some freedom to move in either direction before anything of real consequence or real significance actually takes place. And so as we head into Friday's session, we've of course got the jobs report as a potential market mover out there. The tone of the day may be set by the response to that number, so we've got to stay on our toes out there. But keep in mind that the last 2 Fridays here for the S&P, right here on the 22nd of January and the 29th of January, both of those, the previous 2 Fridays, have both produced moves in excess of 2% here for the S&P 500. This one was right over 2%. This one was close to 2.5% last week. And so expectations may be running a little bit elevated, maybe a little bit high among traders to see if we can get another one of these big Fridays. And if it's going to happen, if we're going to exit this range, then that's what we're going to need. We're going to need a big Friday. So watch the boundaries of this range, because right now follow through still is pretty much non-existent. And until we can climb out of this range to the top side or fall out of it to the downside, you can just expect to see ongoing choppiness and lack of continuity from day to day. So thanks a lot, everyone, for stopping by. I'm Jeff White, and we will see you in the Theo chat room on Friday.